Welcome to the Deep Dive. Today we're taking a deep dive into the first quarter results for Anand Rathi Wealth. We're focusing on their Q1 performance for fiscal year 2026. Now, this is a company that's consistently been on our radar, and their latest earnings call definitely gave investors something to chew on. It happened July 10th after the Indian market close.
It certainly did, and the market reaction, well, is pretty immediate.
Yeah.
Positive. Signaled, I think, strong confidence in their strategy, their growth path.
Okay, so let's unpack these results and see what's really going on. Let's get into it.
Absolutely. It's a compelling story this quarter. Builds on what they've been doing.
Right. So kicking things off with the headline numbers. Anand Rathi Wealth, they delivered a modest beat, right? Both top and bottom line.
Yeah, beat. Consolidated revenue, 284 crore. The street was looking for about 276 crore.
Okay. And EPS.
Earnings per share came in at 11.31. The expectation was closer to 10.90.
So a decent beat there.
A decent beat, yeah. But for us, what truly stands out isn't just hitting those numbers. It's the underlying operational strength.
Right, like the AUM.
Exactly.
Yep.
Assets under management, AUM, and jumped an impressive 27% year over year, reached a record 87,797 crore. And just for context, a crore is 10 million rupees, so.
Yeah, significant scale we're talking about.
Huge numbers. And that was driven by inflows.
Driven by really robust net inflows, totaled 3,825 crore. And that inflow helped lift their operating margin by 300 basis points.
3 percentage points.
3%, yeah. Up to a very healthy 33%.
Yeah.
So you put together that clean beat, the strong operations, the upbeat guidance. Yeah, the market liked it.
Okay, so those are some impressive headlines. Let's really dig into the mechanics now. How did they actually achieve that this quarter? The profit after tax, PLT, grew 28% year over year to 93.9 crore. That's a strong number, but what's driving that efficiency?
Well, what's truly fascinating here is how that PTC margin expanded, hit 33% for the quarter. Compare that to 29.9% a year ago. And annualized return on equity, ROE, was 44.4%. Wow.
Yeah, it highlights strong operational leverage. Profits growing faster than revenues because, well, their costs aren't scaling at the same rate.
And that comes down to?
It ties back really directly to their employee cost structure.
Right.
So, yes, fixed employee costs went up a bit, but the incentive provision, that actually decreased year over year.
Interesting. So lower overall employee expense relative to revenue.
Exactly. And it's largely because their relationship managers, their RMs, are maturing. They're contributing more revenue now, significantly more, but they haven't quite hit their maximum incentive payout levels yet.
Ah, okay. So it's a smart way to manage that growth phase.
Very smart, yeah.
So clearly they're managing internal efficiency, the employee economics, but ultimately a wealth manager needs client assets. How are they pulling in those critical net flows, that 3,825 crore number, especially when the broader market might be a bit shaky?
That's a really good question, especially like you said, because this was a quarter where overall mutual fund equity net flows industry-wide actually saw a decline. Management really emphasized their ability to remain, quote, agnostic to market sentiment. And this isn't just talk, right? It shows a deeply embedded client-centric model. It acts like a competitive moat, basically.
Okay. Allows them to keep pulling in money even when things are volatile?
Precisely. And you see the proof in the numbers. An incredibly low client attrition rate, just 0.11%.
0.11%. That's tight.
It's phenomenal. And they also added about 600 new client families in the quarter, brings their total up to 12,330.
Okay, that 0.11% attrition is amazing. But let me play devil's advocate for a second. Does that kind of intense client focus, that loyalty, does it hit a ceiling eventually, or are there risks there?
That's a fair challenge, definitely.
Yeah.
Their strategy, though, suggests they're mitigating that risk. How? By focusing really heavily on developing their RMs internally.
That kind of pipeline.
Yeah, their unique RM growth strategy sees 80% of their RM growth coming from within the company. And get this, the number of non-mature RMs. So those with under 40 crore in AUM, that number drops significantly, from 93 down to 54 just in this quarter.
Okay, so that creates a lot of room for promotions.
Huge capacity, yeah. And they even mentioned having the next 100 RMs already in training.
Wow.
So it suggests a really robust, sustainable pipeline. Less reliant on going outside, which can be more expensive, right?
Yeah.
While constantly feeding new, ready-to-go RMs into the system.
Right, right. That approach clearly minimizes the immediate hit from new RM incentive costs while building that future revenue stream.
Smart. Okay, looking at that, management actually raised their guidance, both for FY26 revenue and PP. How are they looking against those new targets?
Ambitious targets for sure, but they're already well on their way after Q1. They've achieved 24% of the revised FY26 revenue guidance. That's any 1,175 crore now.
Okay.
And 25% of their PAT guidance, which is 375 crore.
A quarter of the way through the year, a quarter of the way to the target makes sense.
Exactly. And what's more, they're already 40% towards that huge AUM target of 1 lakh crore for FY26.
1 lakh crore. Remind us, a lakh is 100,000. So 1 lakh crore is 1 trillion rupees, or roughly what, 120 billion US dollars?
Yeah.
It's a significant leap they're aiming for.
Okay. And management feels confident they can hit these.
Express strong confidence, yeah. They made a point of noting they might be the only company in the Nifty Small Cap 250 Index to consistently provide and meet PI guidance for 3 years running.
That's a track record.
It is. And they also, wisely I thought, drew that distinction between AUM and revenue. AUM is like a photograph, right? A snapshot in time. It can move with the market. Revenue, they said, is like a movie. It reflects the day-to-day operational effort, the consistency.
That's a good analogy. And it sounds like the movie isn't just playing in India. We heard updates on international expansion.
Yeah, they touched on that. Their Dubai office has actually been running for a decade now.
Okay.
And they have UK and Bahrain offices in the very early stages getting licensed. They're really keenly focused on capturing that growing interest from non-resident Indians, NRIs, wanting to invest back home, especially with the opportunities opening up in Gift City.
Right, Gift City. For listeners who might not know, what exactly is Gift City?
Good question. Gift City is basically India's big push for an international financial services hub. It's located in Gujarat, designed to attract global capital, make international finance easier.
Got it. So Anand Rathi setting up internationally fits right into tapping that NRI money flowing back, potentially through Gift City.
Exactly. It's a strategic global footprint aligning with that long-term vision, tapping into a huge pool of capital. And beyond their own growth, management also weighed in on the broader regulatory picture, which affects everyone, obviously.
Like the options market stuff.
Yeah, they gave a pretty interesting perspective on the recent developments there, especially around that Gain Street episode you might have heard about. Management actually applauded SEBI, that's the Securities and Exchange Board of India, for shifting how they measure risk, moving away from just notional contract values towards delta-based limits.
Okay, so moving from a simpler measure to one that's more weighted for actual risk exposure.
Precisely. A more accurate risk-weighted approach. They see it as a crucial step, de-risking the market, curbing manipulation, ultimately good for, legitimate players.
Makes sense. Did they mention their structured products business?
They did briefly. Primary issuances of about 1,700 crore and secondary market activity of around 700 crore.
Okay. And finally, it sounded like they might offer more detailed metrics in the future, like per RM.
Yeah, that was interesting. They expressed openness to maybe providing more granular stuff down the line, like per capita net inflow per RM, maybe even broken down by how long the RM has been there.
Wow. What kind of insights would that really unlock for you, the sophisticated investor listening?
Oh, I mean, that's kind of the holy grail for transparency, right?
Yeah.
If you could see that. It would give unparalleled insight into how productive their RMs become over time, really validate that internal growth model we talked about.
Yeah.
Help you project future profitability, maybe with even more accuracy. It definitely shows a management team that gets what sharp investors are looking for.
Okay, so for you, the investor listening, this deep dive really paints a picture of a company that's not just hitting numbers, but doing it with a clear strategy, a playbook. And the market reaction backs that up. Stock popped 4.2% on over 30 times average volume?
Huge volume, yeah. Signals real conviction. I mean, sure, some peers saw a bit of a lift sympathetically, but Anand Rathi's jump was noticeably higher.
So what does that tell us then about their ability to keep compounding, even with all the macro noise out there?
Yeah, it raises that important question, doesn't it? How resilient is this franchise? I think that resilient net inflow story, combined with the strong margins, the disciplined cost management, it really positions them uniquely in that wealth space. Remember, the stock had drifted sideways for like 6 months, right? After that massive 340% rally in 2024.
Right.
And they had the surprise buyback in April, steady AUM growth. It kind of put a floor into the price. These Q1 earnings, though, they seem to have been the catalyst for a fresh breakout, maybe, reflecting renewed optimism in that compounding story.
Okay, now let's shift gears to our segment. This is not financial advice. And as always, these are just thought experiments, provocative ideas based on the data we've just discussed.
Right, not advice. So considering Anand Rathi's demonstrated ability, right?
Yeah.
Compounding AUM through those sticky net inflows, even when mutual fund flows overall are soft, and you add in that operational leverage they're getting from the maturing RMs, well, an outrageous but plausible thought experiment could be thinking about a leveraged long position, a magnified bet on their future.
Okay, leveraged long, going beyond just buying the stock.
Yeah, it's not just a simple long play. It's more like a conviction play, a bet on that whole structural shift happening in India, wealth creation, financial assets becoming more formalized.
And the outrageous part.
The outrageous part. Well, you could consider amplifying that conviction, maybe through instruments designed to magnify returns if management keeps up that track record, undercommitting and over-delivering on guidance.
Okay, so using options or something similar?
Potentially, yeah. Maybe, like long-dated call options, perhaps a couple of strikes out of the money. It implies this belief that the market still hasn't fully priced in that long-term compounding power, especially as they push towards that 1 lakh crore AUM target and keep optimizing costs.
So the implied thought here is a bet on sustained operational excellence, plus maybe the valuation multiple expanding as they scale up.
Exactly. Sustained excellence and multiple expansion. That's the thought experiment. Again, not financial advice.
Absolutely not. Okay, so to recap this deep dive then, Anand Rathi Wealth, strong Q1 FY26, impressive growth in AUM, profitability, driven by those robust net inflows and a really efficient operating model.
Yeah, definitely. What really stands out, maybe for you to think about, is how their unique approach, client acquisition, RM development internally, that strategic international piece, how that might keep differentiating them in what's a pretty competitive Indian wealth management market.
Right.
And the way management engages with market dynamics, regulatory shifts. It highlights, I think, strategic foresight, adaptability.
Good points. Okay, this has been the deep dive. And just a reminder, this information is purely for educational purposes. It is not financial advice. We absolutely encourage you to continue your own research, do your own due diligence.
Definitely.
Thank you for tuning in, and we look forward to bringing you more deep dives into the world of earnings calls.